FinTech and Digital Banking, Reinventing Financial Inclusion.
Malaysia has achieved a high level of basic banking access. Yet financial inclusion is not simply about having a bank account. For many gig workers, micro-businesses, and vulnerable consumers, meaningful access to credit, financing, and financial protection remains a challenge.
Today, our group will present our report titled FinTech and Digital Banking, Reinventing Financial Inclusion. Financial services are currently experiencing a major transformation. Traditional banking, which once relied heavily on physical branches, paperwork, and manual processes, is increasingly being replaced by digital platforms powered by technologies such as artificial intelligence, cloud computing, machine learning, and mobile applications. In Malaysia, this transformation has accelerated significantly with the introduction of digital banking licenses by Bank Negara Malaysia and the emergence of digital banks such as GXBank Boost Bank and Eon Bank. The key question we asked is, how can digital banking improve financial inclusion while overcoming the challenges faced by underserved communities? Traditional credit assessment often depends on formal employment records, audited financial statements, and fixed collateral. This creates a problem for gig workers and micro-entrepreneurs whose income may be real and consistent, but difficult to document. To better understand digital banking adoption, we examine three important theories. The first is the Technology Acceptance Model, or TAM. This theory suggests that people adopt technology when they find it useful and easy to use. In digital banking, customers must perceive that digital services save time, reduce costs, and are simple to navigate. The second theory is diffusion of innovation. This theory explains how new technologies spread throughout society. Digital banking becomes successful when users see clear advantages over traditional financial methods and when the services fit naturally into their daily lives. The third theory is disruptive innovation theory. Digital banks represent disruptive innovation because they serve market segments often ignored by traditional banks, particularly low-income customers and small businesses. By operating with lower costs and digital infrastructure, they can provide services more efficiently. Several technologies make digital banking possible. First is alternative credit scoring using AI and machine learning. Instead of relying solely on traditional credit records, digital banks can analyze transaction history, utility payments, and e-commerce activity to evaluate creditworthiness. Second is electronic Know Your Customer, or EKYC. Using facial recognition, OCR technology, and biometric verification, customers can open accounts remotely without visiting a branch. Third is open banking and APIS. These technologies allow secure sharing of financial data between institutions, creating personalized financial services. Finally, cloud-native banking systems reduce operational costs significantly, allowing banks to offer services such as zero minimum balance accounts. Our SLOR analysis revealed several strengths. Digital banks can provide 24/7 services, process transactions at very low cost, and offer superior user experiences through mobile applications. However, there are also limitations. Digital banks often lack physical branches, face challenges building trust, and spend heavily on customer acquisition. The biggest external risk is cybersecurity. As digital transactions increase, cybercriminals use phishing attacks, malware, and social engineering techniques to exploit users. This means financial inclusion must be accompanied by strong security and customer education. NexusInclusion addresses this gap through NexusScore, an AI-powered alternative credit assessment engine. Instead of relying solely on conventional credit history, it analyzes transactional behavior, payment consistency, and cash flow patterns to develop a broader view of financial reliability. For small businesses, access to working capital can be equally important. Nexus Flex embeds financing directly into merchant and gig worker platforms, making funding available when it is needed, rather than requiring customers to navigate a traditional lending process. The proposed model supports smaller, more flexible financing, with repayments linked to actual business activity. This makes financing more practical for businesses whose income changes from day to day. Module 1. NexusScore. NexusScore uses AI-powered alternative credit scoring. Instead of depending on collateral or traditional documents, it analyzes transaction patterns, payment behavior, e-commerce activities, and even behavioral assessments to evaluate creditworthiness. This enables gig workers and micro-entrepreneurs to access financing. Module 2. NexusFlex. NexusFlex provides instant microfinancing ranging from RM100 to 10,000 Malaysian ringgits. Loans are integrated directly into merchant platforms and gig economy ecosystems. Repayments can be automatically adjusted according to daily business performance. Module 3. NexusGuard. NexusGuard focuses on financial literacy and cybersecurity. Users complete educational modules and receive rewards such as higher savings returns or fee waivers. At the same time, AI-powered monitoring detects suspicious activities and scam attempts. Together, these three modules create a complete ecosystem that improves accessibility, affordability, and security. But financial inclusion cannot stop at providing credit. Users also need the knowledge to make responsible financial decisions. NexusGuard integrates interactive financial literacy modules directly into the digital banking experience. At the same time, greater digital participation creates greater exposure to fraud. NexusGuard therefore combines financial education with real-time protection designed to identify unusual transaction behavior and potential scams. The objective is not simply to lend more money. It is to create a safer and more informed financial experience where access to financing, financial knowledge, and digital protection work together. Together, NexusScore, NexusFlex, and NexusGuard form NexusInclusion, a holistic, AI-powered microfinance and alternative credit ecosystem designed to connect underserved users with more accessible and responsible financial services. The strategy is designed to move beyond a single financial product. It connects digital banking with merchants, gig workers, and underserved communities, creating an ecosystem where better financial data can support better access, while stronger literacy and security build trust. Ultimately, financial inclusion is not just about giving people access to finance. It is about giving them the opportunity, knowledge, and confidence to participate in the financial system